can't be better put than Elaine himself, saying that here is actually a broken economy and there is a lot of cash. It can lead to a lot of misuse of cash, but I think we have an expert who can answer that best. Arvind Sanger, Managing Partner, Geosphere Capital Management, joins us. Arvind, we have so many questions to ask you about our own markets, which are giving us a daily Diwali, as it were. But first, a market that's closer to you geographically. How do you read the ECB's targeted LTRO? I was just looking at the graph last time when the LTRO was announced around December of 2011. Up to February of 2012, the Indian markets rose by about 500 points. The Nifty rose from 4,900 to about 5,400. This time around, do you think the targeted LTRO, because it is targeted, may not create that kind of an impact? What's the impact for us in the emerging markets?
Well, I mean, I would be hesitant to, remember the backdrop when the last LTRO was announced was a massive global risk-off that had been going on for a few months. We're not in the same backdrop, either in emerging markets or in India or, frankly, in global markets. So the backdrop is not where investors were sitting on their hands, worried about the sky falling. And so I don't think the impact is likely to be as dramatic on a broad-based basis. But the reality is the liquidity is going to find its way somewhere. And this incremental liquidity coming from ECB does help offset at least some of the impact of the U.S. Fed taper, as frankly is the in liquidity being infused by the Japanese central bank. So you've got a couple of taps of liquidity that are open or opening in ECB's case, offsetting the tap that is gradually being turned off in the U.S. So the reality is, from a global liquidity standpoint, liquidity is still plentiful. And I think, as you were just playing the comments that El Arian made, I think the real issue is whether it's in Japan or it's in Europe, the economic, improvement that we've seen seems to have run out of juice. And all we are left with is the liquidity, hoping that that will somehow transmit into economic growth. And people are looking at the U.S. As an example and hoping it'll follow. And I'll just say one thing about where I think one of the errors may lie is that the U.S., partly because we follow the energy business well, the U.S. coinciding with the Fed liquidity injection starting in 2009 was the shale gas boom in the U.S. Almost no economic commentator talks about the fact that how important a driver of economic growth in the U.S. the shale boom has been, which has very little to do with Fed liquidity injection. So therefore, my concern with the European actions and Japanese actions is that the reason that they're less likely to be effective is they have nothing else going on that might give them the illusion that the central bankers providing economic growth, and yet it fails. So where India comes in, and this is a long-winded way of getting to your answer, where India comes in is that India is a country that has something structural that could drive a sustained improvement over the next few quarters that people could feel comfortable that could last for a while. And if that is the case, then liquidity is going to look for homes where it can feel more comfortable, that the growth is more believable, rather than hoping that liquidity will by itself drive growth. And therefore, that being the case, I think the Indian market, I can't say that over the next 3 months it's going to have this big pop, but I think over the next several months and hopefully over the next year plus, has underpinnings of both liquidity and fundamentals that should drive robust performance.
Arvind, hi. Good morning. That's the key question on the street. I mean, we've seen a big rally already. The Sensex is at 25,000. But now there are some positive noises coming in from the government, and most are expecting a sizable pre-budget rally as well. What could the extent be of the rally from now up until the budget in July?
Well, this is becoming tricky to call, but I would say that with the ECB action today and everything else going on, I would have said that 7,500 was kind of where we'd hang out till the pre-budget session. But if we continue to see more and more actions by the government, and I don't think the budget has become the be-all and end-all in the past, but with the new government and with the budget due, just about a month from today, between now and then, if we continue to get positive other news flow, I think the market could easily, go up 5-7%. So we could be creeping towards the high 7,000s on the Nifty, if not approaching 8,000. So I would have to say that the market is, frankly, near term exceeding where we thought we'd get to this quickly. But if the government continues to give us some signposts along the way, then I think we could continue to move higher.
So, Arvind, at this stage, what will you buy since everything seems to have gone up since we last spoke?
Well, I would say that, yes, you're absolutely right that everything has gone up. So it becomes more of a bet on, where the economic kind of news is likely to be forthcoming. And I think, whether it's the infrastructure sector where stocks have moved, or the banking sector where stocks have moved, or, the power-related companies where stocks have moved, I still think that if one takes a longer-term perspective, there's room for the stocks to run. So while we're in this hope period, I suspect some of these stocks will continue to perform, whereas as we've seen, the stocks, of the past years outperformers like the IT names and the pharma names will continue to lag. And I think the consumer stocks fall somewhere in between. And I think, therefore, we will continue to see, more anything connected to infrastructure, to domestic economy, even real estate stocks have done well. So I think if one applies long-term, fundamental valuations and upside, even the cement stocks, the domestic auto stocks, all of these, one can count on, pretty powerful cyclical recoveries ahead of us. So again, the hope trade can drive all of these sectors. And frankly, it's very hard to pick a hole in any sector while you don't have specifics on the table. And the real test will come after the budget when we get a clearer, or between now and the budget, and I'm assuming by the budget time we'll get a much clearer picture on what the government's initial priorities are. And then we'll start to see separation, and you could see some sectors underperform at that point where the government doesn't seem to be taking as aggressive a stance on, and some other sectors where the government turns out to be more aggressive. The stocks could continue to run, but in the next 4 weeks in the hope trade, I think many of these domestic-facing sectors could continue to enjoy a bull run.
It's interesting that you point out that, you want to wait for some specifics to be laid out on the table by the government. In fact, yesterday, sources told one of our colleagues that, this fuel under-recovery issue could be sorted out very soon. There could be a hike in LPG and kerosene prices as well. Oil marketing companies have already seen a significant gain from the start of the year. Would you still put incremental money into the energy space, and particularly in OMCs?
Well, I think we've heard about the fuel prices. The other thing we've heard about yesterday was that the government was going to make a decision on the gas price issue by 1st of July. So if they are on that faster path on some of these key energy sector related government decisions where they want to put clarity on the table, then I think the energy sector, whether it is some of the downstream companies like the HPs, BPs, or some of the upstream companies, whether it's an ONGC, Oil India, or even a Reliance, I think you could see continued recovery. So we still have a presence in that space, and we would look for opportunities to add to that, because I think it's clear that this government, it wants to take the hard decisions early, and I think it makes perfectly logical sense that if you are going to want to, raise fuel prices, you don't wait like the last government did till 1 year before the election to start raising fuel prices and hoping that it'll not have a negative effect. you do it early in the term and then get it normalized. And that's what I think it makes a perfect logical sense to do it early. And therefore, it would not surprise me if that were to happen. And if that were to happen, I still think, there's 20-25% upside in some of the energy names.
But Arvind, the reality on the ground is that we still have anemic growth. Our last GDP number was sub 5, and most economists would guess that the current and next quarter are unlikely to do better. At what level will you get a valuation discomfort? At 8,000 or even beyond?
Well, I mean, the markets are funny things, and unfortunately, valuations are one of the trickiest things to make a call on. So, yes, I would have said that the market would have seen some sell-off on the election news. It saw a shallow sell-off, and then it's back up again, and now we're probably going to get a rally and then a sell-off when the actual budget comes out because there'll be too much hope built in. So the index is something that, I kind of is a measure which incorporates a lot of things. I would say when I look at some of these stocks in the subsectors that we look at, public sector banks are trading at, around 1 times book in some cases below. Could they go up 50% in the next 12 months if the economic outlook gradually looks better? It's certainly possible, 0.7, 0.8 times book going to 1.2, 1.3 times book, or 1 times going to 1.5 times. So, you go sector by sector, and you look at some of these construction companies that look, eye-poppingly expensive. When you look at some of these construction companies, they're trading at 8, 9, 10 times EV to EBITDA with a lot of debt. But if you start to get meaningful new orders and the backlog suddenly starts to grow, or you see visibility on that, then, people will have patience to wait for the earnings. So I think that it's one of these where there's a free pass in some sense for the next couple of quarters for companies where visibility becomes believable. And that's where I think the key thing is. This is a risky time where we're kind of playing with what I would say a hope trade, and therefore one has to be moderately cautious in not getting too far out on the hope trade, because there are going to be some hopes that are going to be dashed. And therefore, I think the risk reward, frankly, over the next month is going to become much more evenly balanced. And therefore, I would, say that investors will need to be conscious of that going into the budget, that not every hope is going to be fulfilled.
Okay, now you're talking, Arvind. But are you buying any mid-caps at this juncture? Because that seems to be the biggest game in town in the last 1 week.
Well, I mean, we've been buying mid-caps since before the elections. We felt that the large caps were played out to some extent, and we felt that mid-caps would be the place where, domestic investors, as well as some of the more intrepid FIIs would step in, and clearly that seems to be the area where valuations still give you comfort that you can find companies that if the cement cycle takes off, or if the E&C cycle takes off, or some of these companies have huge operating leverage. And where we are able to get comfort around the balance sheet issues, then there are many sectors where mid caps have, in our opinion, more attractive risk reward than some of the large caps.
All right, Arvind, pleasure speaking with you. Thank you very much for staying up for us this evening. Okay, so that's one voice of both optimism and caution, you will have to say, as you get towards 8,000. As Arvind points out, risk and reward will be more balanced, and investors need to get a little cautious as we get into the budget.